So before we start recording transactions in the journal, let's go over some double entry bookkeeping / accounting rules. We're going to go over some critical rules and then just some formatting rules. So let's go over the more critical rules first. Now, just like we learned in Chapter 1, each transaction has to affect 2 or more accounts. And here's an example of a transaction, and notice there's 2 accounts that are being affected. Looks like it's an owner investment, and cash is one account that's being affected, and capital is the other account that's being affected. The other critical rule is each transaction must affect both sides of the accounting equation equally. And again, that was the same rule that we had in Chapter 1, but how do we do that when we're using debits and credits now? Well, the beauty of the debit credit system and double entry bookkeeping accounting is as long as your debits equal credits, then this rule which says each transaction must affect both sides of the accounting equation equally, then that will be fine. So our 2 main rules are each transaction affects 2 or more accounts, and debits must equal credits. And notice in this transaction we have a debit that is the exact same amount as the credit. And for some formatting rules, which is not quite as critical, we always list the debit account before the credit accounts. So notice cash is the debit account, so we listed that first, and then we listed the credit account, capital, second. And another formatting rule is when we get to the credit accounts, we indent it a little bit, and that makes the journal entry much easier to read. So don't forget the 2 critical rules. Each transaction must affect 2 or more accounts, and debits must equal credits, because if you do that, then you're ensuring that you are affecting both sides of the accounting equation equally.